Hey guys, Crypto here, and this video is a re-upload from Twitter. Again, this is the video that became the most viewed video in history that I've ever shared on Twitter, and I've shared probably 100 or so videos on Twitter. This one got a staggering million plus views, 3,000 likes, tons of retweets and quotes. People absolutely love this video. You can see here in the comments, I learned more in this one video than in any other single video on trading Bitcoin I've ever watched. I have plenty of comments like that about this video. People absolutely love this video. And I say this, and I'm starting the video with this because it's a little bit long, but it's totally worth watching. These are just some of the comments that we've been getting on this video since I posted it. And because of the demand for this video on YouTube, I'm now re-uploading it here on YouTube. So if you haven't yet seen this video, guys, I highly recommend watching it. It's going to play right after this little intro. I hope you guys enjoy. Again, if needed, you can watch it on 1.5x or 2x speed. But you really don't want to miss this if you're wondering about the big picture on Bitcoin, the context of where Bitcoin is in relation to this cycle, where I think we're headed over the next year or so, the explanation as to why I think that's where we're headed, what you can expect in the coming months. This is an absolute gem of a video, guys. Don't take it from me, take it from the thousands of followers that have watched this video and that absolutely loved it. With that being said, guys, we're going to go ahead and play the video. I hope you guys enjoy it.
Hey guys, Crypto here with a video update on Bitcoin in the market. So I wanted to make this video to kind of bring some light into this correction and remind you guys that it makes no sense to be panicking here. But for now, guys, let's just jump right into it. We were looking at the move to the upside here, I think at low 50Ks. Literally right here, we had impulse to the upside. And I talked about three different scenarios that could have been playing out, called the healthy bull, unlikely bull, and ultra bull. And of course, shortly after they moved to the upside, I said that it looks like we're seeing the ultra bull and that we wouldn't see sub 51K before seeing new all-time highs. Played out almost literally to the T here. We hit new highs before going back below 51K. So the ultra bull did actually play out, which was kind of that up-only structure without seeing any sort of significant pullback. And you can see here, this is actually the idea that was shared on Twitter. Ultra bull scenario depicted in my last video is now my favorite scenario based on developing PA. Assuming this idea is correct, we may see some consolidation here, but downside should be limited to 53K at the most. And if you look at where we are today, we pretty much followed it perfectly. Ultra bull played out. Where are we now and what are we seeing now in terms of this correction? So again, the idea behind Ultra Bull was that we have a 5-wave impulsive move to the upside and that we're working on that 5th wave here. And once the 5th wave completes, we then expect a correction. A correction here that we're seeing now, perfectly normal and expected. The depth of the correction is the unknown variable. The correction itself occurring expected, okay? A few different scenarios that could be playing out here and we won't know which one is actually playing out. And we use the metrics and the data that we have to kind of get the best estimate of what's playing out, but we will never be certain until the move has further developed. And as it develops further, we get a little bit more clarity and can make a better guess as to what's happening. The fact of the matter is, at the bare minimum, what we're seeing right now is a correction of the move off of 38K. So at the very minimum, we're seeing a correction of this entire impulsive move from 38K. Now that's a fairly large move from 38K all the way up to 69K is a $30,000 move to the upside. And because we are correcting it, you have to keep in mind the scale of the move that preceded it. The scale of the move that we're correcting is important and matters in this context, okay? If you take a fib retracement and just look at the depth of the correction that we have so far, there's a reason I'm taking this as the high, and I'll go into a little bit more depth into that shortly, but we've corrected 25% of this move to the upside. And the important thing is to understand, and I'm not saying that this is going to happen, but the important thing to understand is that in terms of depth of a correction, even a 50% correction of the preceding move is considered healthy. There's nothing wrong with us seeing 52K. And I'm not saying that's going to happen again, but there's nothing wrong with us seeing 52K. Okay, I understand it's a deep correction, but after a 100% rally, a 50% correction of that rally is certainly possible and does not change the high time frame macro picture. A move down to 50K does not mean the bull trend is broken. This is literally a series of higher highs and higher lows. The only way that structure gets broken is a move back below the origin of the impulse, which is 38K. Suffice it to say, the bull trend is not going anywhere. This is a normal, healthy correction after a $30,000 move to the upside. Now, with that being said and that out of the way, let's go ahead and look at the macro a little bit because it's significant here. And there's a few different ways that this could be playing out, and I'll tell you guys what I think is most likely. But again, we had our first major impulse off of these lows back here at 15K. And since then, we've been working on what I call a major third. And I've been getting a lot of questions on this. And so that's why I'm addressing it in this video, because I've been getting a ton of questions. Where are we in this fifth wave that I've been talking about? Are we at the end of the fifth? Are we at the beginning of the fifth? We are basically in the middle of the fifth. The blow off top comes in the fifth subwave. We're not quite there yet. We're in the middle of this major third, okay? And within that third, this is where the little bit of uncertainty comes up. But let's go ahead and talk about where we may be within this third. I'm showing you guys here the impulsive movements of this move. And the orange is the important degree that we want to focus on. First major wave of 5 done. Second corrective wave done. And we're now working on this major third before a major fourth and then a major fifth. Okay, and this is our blow off top. Don't take the price level that I have here to scale, guys. This is not to scale. This is simply to show structure. I'm not saying we're going to 267K. Realistically, I've previously said around 150 plus tens of thousands, but again, no more higher than 300K, and realistically should not come close to that 300K. But this is just to show wave structure. And don't take the time scale to heart either, guys. This is just simply showing you where we are in terms of structure. Important thing to keep in mind is that these major corrections, the major fourth and the major second here, these are typically going to be the deeper corrections of the move to the upside. So I previously said, don't look for any sort of a 30% correction until prior all-time highs are met, which wasn't until we hit 69K. As we were moving up here, I said, don't expect a 30% correction here. I know a lot of people were calling for 30% corrections because they said, oh, we've had them in the past. Yes, we have had them in the past, but typically they don't come until after new highs are met. So over here, we had at the most, we had a 20% correction. And people were calling for deeper, and I said, don't expect a 30% correction. This is probably it. We talked about the bottom being in at 40K at the time. And the same goes for where we are now. The only difference is now we've broken all-time high. Okay, so technically now I'm saying, okay, yeah, at some point we're probably going to get a 30% correction, but I don't think that that time is now. And I'll explain why in a second here. But so far we have 18% correction off the highs. Like I said, I don't necessarily expect a 30% correction here. That doesn't mean that it can't happen. It just means that to me, it's rather unlikely. But just for argument's sake, a 30% correction brings us down to this cluster of consolidation. And I know that a lot are eyeing this region already. It makes sense. It's logical. It is healthy. It's fine. It's normal. It's around a 50% pullback of this impulse. That's totally fine. But for other reasons, which I'll be discussing here shortly, I don't necessarily think that's the most likely scenario. So again, 30% corrections, now feasible, possible. But I think that we're likely going to get that for this major fourth. This will be the deeper correction, in my opinion. And the corrections that precede that won't necessarily be as deep. So when do I think we're going to get our 30+% correction? I think we'll probably get it for this fourth wave, which hasn't happened yet, obviously, and we don't know what type of shape it could take. Could be a ABC structure, could be a expanded flat structure. There's a lot of different shapes that this thing could take, and we just don't know that yet. And we'll get to that when the time comes. But for now, guys, I don't think that we'll see a 30% correction, which means if I'm right, then correction is close to over. But let me go ahead and show you guys our last two major impulses, right? Again, what we're looking at here is we're looking at major impulsive moves of the cycle, right? And we have our first impulsive move of the cycle. We have our second impulsive move of the cycle. We're working on the third and final impulsive move of the cycle right now. And within these impulsive moves, you can see the general idea is that corrections, when they do occur, when momentum is strong in what we call these third waves, the corrections are typically shallow and less aggressive. Okay, so this was our 5-wave structure here on the original impulse. And we had a 1, 2, 3, 4, 5 of the third. Then we had our fourth, and then we had our fifth. As we moved on into this major third wave, which is where we are today, for context, in our larger fifth, if this is the third wave of the first major impulse, then where we are today is the third wave of the fifth major impulse. This was the last impulse, and then today we are here. Just to give you guys some perspective of where we're at. Third wave within the larger first wave, third wave within the larger third wave within the larger fifth wave. This is where we're at. And so just to show you guys the deepest corrections within this third wave, we had a correction here of about 12%. We had a correction here of about 12%. And our deepest correction came here, if I'm not mistaken, which was a 20% correction on this fourth wave, okay? Both of these corrections are 20% moves down. These are 12, 12, and then we got 20% for the major fourth. And then after our major fifth, we got the larger, deeper pullback. Again, this is a great example of why a move to 50K here doesn't break structure. Same idea as what we saw here. We had an impulse, had a deep pullback that failed to make a lower low. This is technically a higher low. And then from there, we got our next impulse. Same idea here. We had minimal corrections. We had a correction here that was relatively deep, which was 16%. Correction here that was 11%. And then our deepest correction here, that was 30%. And again, this is that fourth subwave of this structure, okay? So there's our fourth subwave. And you can see here the nice subdivisions 1, 2, 3, 4, 5. Okay. So again, the fourth subwave of this orange degree was the big 30% correction. You'll notice that this occurred after prior all-time highs are breached. We didn't get such a deep correction in this major third up until we broke the prior all-time highs and saw this major fourth. It looks small because I'm in log scale. But if I go off a log scale for a second, this was a move from 30,000 up to 60,000. Then we got basically our fifth wave before a major correction. Okay. So this type of move that we saw was our major third, and then we got a deep correction for the fourth. The idea is simply being, guys, that when we talk about these corrections of different degrees, the larger degree corrections, the 2 and the 4, are generally the biggest. We had an 11% correction, an 11% correction, and then another 30% correction. So once again, you can see the wave 2 and the wave 4 were the deepest corrections that we saw within these impulses. And the same kind of applies here, guys. This wave 2 was a relatively deep correction at 20%. And since then, we've been seeing sub 20% corrections until this level here, where we got a 20% correction, and then we've now pushed up. But I don't think that we're yet ready for this major fourth. And because of that, I don't think we're going to see some massively deep correction here, greater than 30%. I do think that that's coming. I just don't think it's coming yet. And I think we're probably going to see it once this move to the upside completes for this larger major fourth wave. That might be a 30% correction, might be a 40% correction. It's all fair game as long as it makes a higher low of the impulse that precedes it. Now let's go ahead and break down where we are within this third, because it can get a little confusing and you can probably count this a few different ways. But the reality is this third wave is typically the most aggressive movement that precedes our blow off top. Following this very aggressive movement, we get a correction and then we get our blow off. This is a move that's typically going to accelerate very quickly. And part of that means more shallow sideways corrections rather than deep ones. But where are we within this third wave? Let's go ahead and clean this up a little bit more. Got our first complete, got our second complete. Some will argue that the second actually completed here. I maintain that it completed here because we didn't breach these lows. And if you go down to lower timeframes, this is a very impulsive looking structure on the lower timeframes. Let's just go ahead and check it out. You have a pretty clear impulsive structure here with nice 5-wave subdivisions as well. I consider this the end of the second, and this was the start of our third. It doesn't matter too much for context. It matters a little bit because it does affect the count from the lows and where we may be within this larger third, but that's a little bit of the reason why there's some ambiguity here with regards to where we are in this larger third, because if you count this, then we're in a different spot. If you don't count this as the first impulse and you count the first impulse starting off at this low, then we're in a different spot as well. So there's a little bit of ambiguity here, but for all intents and purposes, it shouldn't make too much of a difference. Let's go ahead and talk about two options that I can see here. Okay, so the first is that we had our first subwave here, second subwave here, third subwave here, fourth subwave here, and fifth subwave here. Okay, I'm going to change the color just to distinguish between the larger orange that we're talking about and these smaller degrees. Okay, in this first scenario, we've now completed a 5-wave move off of these lows. We've now completed our major third, and we're now seeing this major fourth wave correction. And in this case, yes, 30% correction is possible, okay? Because now we're no longer correcting the move off of 38K to 75K. We're now correcting the move off of 24K to 75K. And so now if you consider this the full impulse, then a 25% pullback takes us to 54K, and a 50% pullback takes us to 36K. Now, let me be very clear in saying that this is the absolute least likely scenario that is occurring here. But just to entertain other ideas or other counts aside from my primary, I'm going to talk about it. But this is very, very unlikely in my opinion. The third wave that we see here is typically very strong and very aggressive, goes pretty much vertical. This looks more like the beginning of the third wave than the end of it. You can see that we had a base formed here. We have this move to the upside, and we're starting to get a more steep angle to this incline, but we're certainly not parabolic yet. And we're kind of building up this verticality, I should say, right? And again, that's normal for a third wave. And the idea is that by the time that we are ready to go up, these moves get steeper and more aggressive. And then when we get something like this to where we're nearly going vertical, then that kind of typically marks the end of this third wave. And then we get that deep fourth wave correction. And then we get the blow off top fifth. So this does not at all look like a completed third to me, which means that this count, for the most part, I will dismiss it. I don't think it's reasonable. I don't think it's feasible. I don't think it makes sense in the context of where we're at and with the way that things should be based on the experience that I've had over the last 7 years in these markets. This doesn't look very viable to me. I'm just pointing it out because you have to consider all options, even the ones that don't look reasonable at all. That one certainly doesn't look reasonable to me. In any case, guys, that's that. Okay, that's the most bearish scenario that we have here. Extremely unlikely for a multitude of reasons, not just because of the wave count and the structure and how it looks, but because of the data and the metrics that I'll show you here in a second as we move on to the next part of this video. But for the most part, I don't consider that reasonable or logical. The other option is something like this. First wave is in, second wave is in, and now we're working on a major third before a fourth subwave, and a fifth before this major third completes up here. Now this to me is a lot more likely. We have a completed subwave here, a second completed subwave here, a 5-wave move here, a nice correction here, which was our range that we were previously in. So we have completed 5-wave moves here. We have this correction. We have another completed 5-wave moves here. We're getting another correction here, and then one more leg up, and we complete a 1, 2, 3, 4, 5 for this third. Then we have a fourth subwave, corrective structure, and then we have final fifth of this larger third. This sort of structure makes a lot more sense to me. And then we get that deep 30 to 40% pullback, which in context, I'll just show you guys here. Again, we're not going to be at 200K at this point, so don't take the price axis to heart here, but just to give you guys an example, this looks reasonable, right, based off of what we've seen, and this is a 40-50% correction. This correction probably occurs closer to around this point here, around maybe over 100K, a little over 100K, probably close to 100K, maybe at 100K, because those big round numbers, people like to take profit there. So maybe hitting 100K ushers in this fourth subwave here before the fifth, something like that. And you'll see that this correction that we're seeing is probably of a smaller degree than what that big larger correction that's going to be here sometime in the future. Now, in terms of depth of this correction, if this is true, then we're simply just correcting this leg to the upside here. We're not correcting this entire move, which means the depth should be relative to this move to the upside, not relative to the move from 25K. And so we're not expecting, again, a move down to 30Ks or anything crazy like that. In fact, we should expect, obviously, a higher low above 38K, goes without saying. And then I know a lot of people are eyeing 53K, but realistically, I think there's a decent chance we front run this region here. Even though it's technically fair game and it wouldn't be unhealthy or wouldn't cause any issues to go down there, I think we don't really have enough sell pressure to take us there. And I'll talk about that in a minute as well. But yeah, let me go ahead and break this down a little bit more. I'll just give you guys an example structurally. So 1, 2, 3, 4, 1, 2, 3, 4, 5, major fourth. Okay, this looks a little bit nicer, maybe in terms of price, than the prior thing that I drew way up here. There's our major fourth. There you go, right around 100K. That makes a little more sense to me. And then our blow off top fifth. And again, that looks like another pretty vertical 5-wave move to the upside. And this marks the completion of the move off of 15K and the completion of our cycle. This is exactly what I'm talking about here. So the major correction that you guys need to be weary of is going to happen higher up, in my opinion, somewhere around here. And up until then, we're seeing corrections, but they're healthy and normal and expected as we continue to go more vertical. You'd expect this rate of ascent or the slope of this move to the upside to continue to increase into our parabolic advance. Now, at some point, we do break these trend lines, right? So whenever this correction ends, we'll probably have a steeper trend line. And at some point, this trend line, as you can see, if I'm going to extend these out, at some point it's going to break. When it breaks, that's likely the start of this larger fourth wave. That's one tip and trick to be able to identify the start of the larger corrections, is when these aggressive uptrends kind of break and we get another, what we call like a basing period before continuation. Watch these trend lines. I'm not sure when this correction will end, but expect some more sideways, and then we'll probably move up even more aggressively than we did here. The slope of this move to the upside should increase. And then when we finally do break this, we're probably seeing our larger correction. Now, if I zoom down to the lower time frames, let me just do this real quick. Let me count the subwaves of this third wave, okay? Between the orange 2 and the orange 3, we should have a 5-wave move to the upside. You can probably count it a couple of different ways, but I'm going to count it like this. And you can see within this third wave, we have 1, 2, 3, 4, 5 waves. Then we have our fourth subwave and then our fifth subwave that matches this first subwave. So this is the larger third. Then we get our larger fourth. Then we get our blow off top fifth. In this context, you can see that this correction that we're seeing now, very reasonable, nothing to be panicking about, nothing to be afraid of. To actually invalidate any sort of bullish structure, we need to go below 38K. Technically, anything above that is fair game. Realistically, I don't think we are even going to get to 53K. But if we manage to get down here, that would be like, in my opinion, like a very quick wick into what is going to be a very significant level of demand. You can see based on this consolidation, we'd expect buyers to step in here, but I don't think we're going to get there. If we go down to lower time frames here, let's talk about some of the data and metrics that I'm seeing that make me think that. Our fifth wave ended right here, our fifth wave of this move to the upside. And again, guys, all these waves are just different uptrends on different degrees, right? All we're looking at is a high, a low, a higher high, a higher low, and a higher high, forming an uptrend within a larger low, high, higher low, higher high, higher low, higher high, forming an uptrend. That's all we're doing with Elliott wave, just to be clear. It's basically market structure and trends People don't quite understand that and dismiss it because they don't understand it, but it's just looking at uptrends essentially, right? So we completed this localized uptrend from 38K up here at 69K. Now we're correcting it. This was the high. So essentially what we have so far is just kind of a range. We got something very similar to this earlier right here. We had a high, put in a low, took the highs, took the lows, expanded. Now this is one way that this could play out. If this is our top of our fifth wave here, we could take the highs, then take the lows, and then see expansion. And so far we have taken the highs, right? We saw this deviation above the highs. And now I know a lot of people are looking for that deviation below the lows and then expansion. That would be very similar to what we got here, right? But doesn't mean that this has to happen, right? This is not like a requirement to happen. And a lot of people will be looking for that because it's logical, it makes sense, but it's not by any means required. And you know that there's probably a lot of people looking to bid below these lows, looking for a soup of these lows into this cluster of demand to bid here at 56 to 59K. It's logical, it makes sense. But what we get a lot of times in these very aggressive uptrends, especially in these wave threes, is a lot of times we get what we call a running flat in Elliott wave terms, what you just see as a swing low, a higher high, and then a higher low in continuation without actually getting the sweep of these lows. And I can go back in time and show you some very quick examples. Here is the first impulse off of 3K to 14K. You can see we put in a high, took the highs of this range, made a higher low. We never took the lows, went up. Put in a high, put in a low. This was the range highs, the range lows, took the highs, failed to take the lows down here, and went up. So that happened twice in the first impulse. And the third impulse wave here, something similar, went up, put in a range high, put in a range low, took the highs, failed to take the lows, continued up. Did it over here too. Like you can see it sort of bleed to the upside without really coming down for these lows. So we've seen it frequently enough to where I know that expecting this as a given is probably the wrong train of thought here. Realistically, odds are more likely that we don't do that and that we simply put in a higher low above these swing lows and then continue, consolidate, and then continue up. That's actually probably statistically more likely than us actually moving down to take these lows, which is another reason why I think that 53K is probably not going to be met here. But just in case, if we do, it's not the end of the world and it's technically healthy and technically fine. And if we do take these lows, you'll be watching for a reclaim. If things get absolutely extreme, then okay, maybe a wick into 53K, which again would be normal and healthy. So yeah, that pretty much explains where we are at in terms of this correction, why it's nothing to be panicking about, why it's healthy, and why you should really not be concerned here about anything but buying the dip and dollar cost averaging down. Not financial advice, of course, but that's all I really care about right now. I'm not so concerned about the dip as much as I'm concerned about, am I deploying my capital effectively at the right times? And that's about it, right? Am I jumping in too early? Am I jumping in too late? Am I waiting too long? Those are the types of questions that I'm asking myself right now. Not so much, is this the end of the uptrend? That's the last thing that's on my mind right now. By no means do I think that this is anything more than a road bump or a speed bump on our way to 100K plus. So that being said, let's talk about some of the other data that we're seeing here that makes me think that most people are probably aiming too low with this 53K target. A soup of these lows, okay, yeah, I can see that as reasonable. A move down to 53K, I find rather unlikely. But let's go ahead and jump into some of the other data that makes me say this. We'll go ahead and take a look at Velodata, which many of you who watch my videos have probably seen quite frequently. And let's go ahead and take a look at all of our metrics, right? So funding, obviously freaking low, the lowest that we've seen in a while. We're back down here at the same levels that funding was at in the low 50Ks. Very, very healthy funding level. Pretty much neutral flat is what I'd call this. Per premium, pretty much flat as well. In a perfect world, we get the spot premium that we see, the darker blue lines here, which historically have indicated that there's a lot of price pressure to move up. And typically anytime we get a spot premium here, we typically then do move up. But that's going to be unrealistic as we push into what is now like well within the depths of this major bullish move to 100K plus. That spot premium is going to be a lot less likely now because people are ready to spend money and pay a premium to long Bitcoin on leverage because it's so freaking bullish, right? At this point, it's unequivocally bullish to anyone who looks at this chart. And so people are ready to spend and pay a premium to long Bitcoin on perp exchanges rather than not doing so, right? So there will almost always be a perp premium moving forward. The days of seeing a spot premium are probably gone for now. And the same goes with funding. Funding will almost always be positive now. The days of seeing negative funding is probably gone, and funding will stay higher longer. The days of seeing low funding consistently are gone, which is why this is so healthy when you see this right now, because it's not going to be the norm. And I posted a tweet earlier that talked about that. The days of low funding longs are coming to an end. As you break per all-time high, you better get comfortable with high funding rates as they will be the new norm. And you can just see here from this chart, guys, the last time that we broke prior all-time highs, funding spiked and stayed consistently high up until the top. There was no negative funding after we broke prior all-time highs. So if you're looking for negative funding as an indication that we're healthy, and if you're thinking that we can't move up on high funding or without negative funding, you need to consider this, that we're probably not going to get negative funding or even consistently low funding until all-time highs are actually met. So no longer is looking at funding a very valuable gauge as to when we are ready to move up again, because we can certainly move up when funding is higher than it is now. So these metrics down here, the per premium and the funding, are a little bit less relevant in today's market environment. With that out of the way, let's take a look at open interest. And we can see that it's relatively close to this, what I like to call our baseline, where typically when we hit this baseline, it tends to mark like a local bottom. Open interest is a measure of the amount of leverage positions open in the market, both longs and shorts. So it doesn't really give us a directional bias, but it does tell us when there are a lot of leverage players in the market. And so generally the higher that open interest is, the more likely it is that we see some aggressive volatility, because when there's a lot of leverage players in the market, it's easy for there to be liquidations. And when there's liquidations, we get volatility. And when we get volatility, we get these big wicks to the downside. So typically, the lower that open interest is, the healthier it is, and the less sort of massive flushes that we'll get when open interest is lower. So open interest is relatively healthy right now. You can see at our highs at 73K, it was here at 178,000 coins. We're down to 166,000 at these lows. It's been lower, certainly been lower, but it's also been a lot higher. So open interest is relatively healthy. And as long as we don't see any massive spikes in open interest, it looks good here. I previously shared a chart where I basically said, okay, if this is our baseline of healthy open interest, then this is kind of our danger zone of relatively high open interest. And so I previously said that if we do make a move to the upside and open interest ramps up along with that move, then you need to be concerned about another squeeze to the downside. And that kind of does apply here as well. If we do make a move up and open interest kind of ramps up with that move to the upside, it means a lot of leverage players open positions up here. And if price is moving up and you're getting a ramp up in OI, it's typically directional longs opening up here, which means that if price can be forced back below where the OI buildup started, they all get flushed and forced to close, and that causes price to drop further and open interest to reset. So that's the logic behind watching open interest here. Yeah, this is something that you want to pay attention to in open interest, and right now it looks healthy. So funding and per premium, very, very healthy for what they are. Open interest, relatively healthy as well. This is essentially a giant range that we're in, if you think about it, right? So I go back to the price chart. What we have here is essentially a range, right? And we've taken the highs of the range now. The lows remain untapped. Again, no like requirement that we take them, but certainly possible. And even if we do take them, all we have here is ranging price action. Nothing to be worried about. The same type of ranging price action we got here when I said there's nothing to be worried about at these lows, right? Same idea here. So don't panic. Don't be freaking out here. Perfectly healthy, okay? Now, let's talk about upside targets, downside targets within this range and how this could develop. Okay, so here are the heat maps, guys, and I want to just kind of share some thoughts here. What we have here is kind of a quick little lesson on how to interpret open interest with price action. You can see here that we had a rise in price, that we got a rise in open interest along with. And this is actually a perfect demonstration of what I was referring to earlier. When you get a rise in price along with a rise in open interest, it means a lot of leverage players have opened up. And again, they're primarily directional longs because price is moving up. These are market longs buying in here, market leverage longs buying in here, pushing price up. If you manage to push price back below that point, then typically they're forced to close their longs, and that causes open interest to fall back down. So you can see here the open interest is built up to literally about this point here. It peaked right here. Okay, no surprise, it's peaking. And then as soon as we push below the origin of this ramp up in open interest, we saw open interest start to flush down. And you can see that the biggest flush of open interest happened around here. This is essentially where these longs probably puked and closed their longs for a loss, causing open interest to tank down to these levels here. These bids actually look like they got filled, and then price grinded right back up. Now you can see on this grind up, there is not a very big ramp in open interest. In fact, open interest has actually been declining on this ramp up. That is what a healthy move to the upside looks like. This is what we want to see, not this, where we have a rise in open interest with a rise in price. We want to see a rise in price without a rise in open interest, because this implies that this rise is more driven by spot players over perp players. Because if perp players were driving this price rise, we'd expect open interest to be rising. But because it's declining, it means that this move is likely spot driven, which is healthy. I marked off that we had 4,000 Bitcoin in bids down here, which is 240 million Bitcoin in bids. Now you can see that those bids have been pulled, right, for the most part. So 2,300 Bitcoin in bids. We're about 100 million in Bitcoin bids right here now, which is about 2,300 at 60,000 is about 130 million, if I'm not mistaken. 130 million in Bitcoin bids. And you can see here that the entity that had placed bids here has moved those bids down to this region here at 57 to 59K. So now we have $130 million worth of Bitcoin bids below our last local lows. And below that, we have even more bids, which this is pretty significant. 11,800 in Bitcoin bids down here. That's a lot of Bitcoin. Let's go ahead and see here. Let's just go 12K. I can't remember what I said. 12K at an average price of 60,000 is $720 million in Bitcoin bids, almost $1 billion in Bitcoin bids at 57 to 59K. So a couple things to note about these bids. Number one, these are not necessarily walls to prevent price from reaching these levels. Most likely there's intention to fill these bids, which would make for the argument that price should actually be attracted to these levels, or that price will maybe be manipulated or forced down into these bids. So don't think that because the bids are here, we can't reach that zone. That's typically not what I'm trying to point out when I'm pointing out bids like this. What I am pointing out is that there's clearly demand in this region for Bitcoin to the tune of $1 billion. Whether those bids get filled or not is another question. And whether this entity keeps his bids there or pulls the bids is also another question. By no means am I saying that these bids must get filled. Price may never reach these levels. If price does reach these levels, the bids can be pulled, but typically, more often than not, they get filled. And you can go to the footprint chart, and as price pushes in to these bids, you can see when they get filled. So you can see here that someone market bought 1,000 Bitcoin. The sell wall of 660 Bitcoin looks like it was probably chewed through, but you can go down to the footprint charts and actually tell tick by tick to see exactly where bids are being filled, where these walls are being filled, and where they're being pulled. And for the most part, as I previously pointed out, we had some bids in the 63K region. Those did get filled. You can see down here. Let's go ahead and change this just to make things a little bit more clear here. So we're going to go minimum. And this will now show you tick by tick. So here you go. You can see you had a buy wall of 400 Bitcoin that was filled here. You can see that the corresponding market sell of 445 Bitcoin right at this level means that whoever had set these 403 Bitcoin bids were filled. Okay, so that's how you can actually go ahead and check to see if these are being pulled or if they are being filled. So whenever I say that bids are being filled, I get a lot of people that comment and say, no, they were spoofs. And I'm like, no, they've been filled, because I literally just take a look and check the data to see if the bids are filled or not. But the point being is that these bids may never be met. If they are met, they could be pulled. But the bottom line is most likely that there's a lot of demand here, and it makes sense that this entity is looking to fill these bids, not just putting them for show. So lots of support in the form of demand waiting below current price lows. And again, it's possible that price is manipulated down into these bids because someone wants to fill Bitcoin here, and it makes sense why. Again, if we zoom out, and I've told you already that this is essentially just a higher low within a much larger uptrend, it makes sense why someone wants to fill $1 billion of Bitcoin worth of bids in the low 50Ks. That's a dream entry. Whether they will get it or not, that is another question altogether. Again, lots of support below us, nothing to be freaking out if we go a little bit lower. Clearly, there's demand and interest below as we go. That is it for this video as well. If you guys enjoyed it, please like and share. I hope you guys enjoyed it. I hope you guys learned a lot. Feel free to ask questions in the comments. I won't be able to get to all of them, but I'll try to get to as many as I can. And I hope this video put your mind at ease with regards to Bitcoin. Again, guys, don't freak out, don't panic. You make it through this, you get to enjoy what comes next, which is bigger moves to the upside when the simplest gets going than we've seen yet. I'll catch you guys in the next one.